And good afternoon. Welcome into Market Talk for Tuesday, April 6, 2021. A good afternoon to you. I hope you're enjoying the nice weather wherever you are in the country. A lot of spring, even summer-like weather showing on that weather map here today. A beautiful day to get outside, hopefully in your area. Thanks for tuning in to another edition of Market Talk. Good afternoon once again. I'm your host, Jesse Allen. Great to have you here. MarketTalkAg.com. Our home on the web. That's where you could find us, MarketTalkAg.com. All of our social media links are there. Also, all of our streaming sources. You can listen back to past episodes of the podcast there as well. It's very easy. One-stop shop, MarketTalkAg.com. A lot of positives to talk about with our market trade today. Let's bring in our guest here on the show today, our good friend Jim McCormick with agmarket.net joining us. Jim, good afternoon and good to have you back on the show.
Oh, thank you for having me. And yeah, like you said, the weather is phenomenal. I'm here in Northern Illinois, and believe it or not, there's a few guys planting today.
Yeah, that early spring planting is starting to happen in some parts of the country, and I think that's definitely got our farmers happy. We'll just have to maybe catch up on some of those rains in some parts. I know that drought is still getting worse, especially the northwestern plains, Jim.
No doubt about it. You look at the drought monitor, the northern plains are where the drought's really intensifying. I know some of the weather guys earlier this week are kind of worrying, is that drought going to merge with the drought in Texas and really bring us a summer heat wave? Time will tell, but it's something we need to kind of keep an eye on, no doubt about it.
Definitely. And the markets seem to maybe be turning their focus ever so slowly back to weather, but we're still trading those acreage numbers from last Wednesday's USDA report, and just such a surprising number that came out for quartered soybeans. And as we look at this market today, for the most part, a positive day. We did finish off the session highs, but overall, what did you see in this market trade today, Jim?
Well, the one thing I think most important, I think, for the bulls out there is you saw the reversal of the spreads. What I mean by that, folks, is right after the USDA report last week, they were selling the July contract, buying the new crop, and that spread really collapsed. Well, what we saw today was a bull spreading coming back in. The May and the July corner up. These corners down all day long, and that's a good sign, because traditionally when you want a bull market, you want to be led by the front months. And what I think you're seeing, Jesse, is going on is the market's kind of being a little bit prepared for this upcoming report on Friday, which is not a new crop number. All the numbers we get on Friday are all old crop numbers, and we anticipate them to be friendly, plain and simple.
Yeah, and that's the other thing, too, we got to consider is that report coming up on Friday. We're basically, back-to-back weeks with big reports here. I know that March, that prospective plantings one we had that on the calendar for quite some time, but this April WASDE report really could do some things to this market as well. And like you mentioned, it's looking fairly friendly unless USDA does something weird.
Exactly. Weird is probably the good way to do it. Word to use to describe it. When you look at the export sales, folks, right now we've sold about 99.5% of both the corn and the beans of what we anticipate to sell. Now, remind you, we got 5 more months left of the marketing year. So how do they not raise those yields, those exports, Jesse? We're guessing they have to. And on the corn, it should be as much as 100, 200 million potentially. We do think they'll step it up, but they will raise it. Then on top of it, the feed number. When you look at the quarterly grain stock numbers that we got last week, it suggests that we fed a record amount of corn, and the record amount of corn and feed residual use in the last 2 months, which argues that they got to raise the feed number on this report. So the crux of it is this ending stock's going to tighten, and that should be bullish.
Now, we did finish off session highs today, especially in soybeans. We were trading up double digits there for quite some time. We pulled that back at the close. Anything you took out of that as maybe a worry in this bean market? This bean market overall just seems very bullish, and maybe some price rationing finally starting to take place.
Well, I think what you're seeing a little bit today is just a little bit of frustration with what we're going to see on Friday. And what I mean by that is the government's been stuck at 120 million ending stocks. Like I just mentioned, they're going to have to raise exports. But if you look at what they've done, is in a normal year, we're going to import 15 to 20 million bushels of beans. This year, the government's already said we're going to import 35 million. If we don't import 35 million and we only import 20, our carryout's 100 million. So what more than likely they're going to do on Friday is they're going to raise exports to justify all the demand. And we're essentially going to raise it by, let's say, 10, 20 million bushels. But then what they'll do, they'll just offset it by raising the importation of it. And that keeps the balance sheet unchanged. Now, the real question then, folks, becomes is, can we actually import 20, 30, 40 million metric tons or 20 million bushels, excuse me, of beans from South America. Because remember, they got this huge loadout going to China as well. And that's going to be the crux is, can we actually get those products in to bridge us over? Right now, if you are a big bean meal buyer, we've heard of some problems where you can buy bean meal easily spot price right now, but if you try to lock in meal for like July delivery, they're literally saying, well, I'll sell you meal. You got to sell me the beans in July to deliver to make it into meal. That's how tight the situation could get because we just don't know. So the market, I think, is a little bit nervous, but the long-term picture really is tight. As for the new crop, I think you're seeing a little bit of pressure because the fact of the matter is we're planting beans right now. I've been doing this now for 25 years, and it seemed like originally when we had early springs, we planted a lot of corn. Nowadays, we're planting beans. If you look on Twitter, I'm sure you've talked to a lot of people, Jesse. What are they planting today? They're not planting corn. They're planting beans. And I think that put a little bit of pressure on the market as well.
You know, and we talk about folks planting beans, and I've heard just that. We're starting to get some of that early bean planting across the Midwest. And, you know, looking at coming out of this report, I know some guys and gals made some new crop sales, or we're looking at it on that big rally that we saw. What's your advice heading into Friday's WASDE report on the soybean side? First, if they're making any new crop sales, is there some things they should look at there?
You know, I would look at like some vertical call spreads, maybe go out at least to the August short data, or even go out to November. And, you know, it might cost you 30 to 50 cents to do like a $13 to $15 vertical call spread, $13 to $16 vertical call spread. But the fact of the matter is, Jesse, we have no room for error. If we plant the acreage number the government gave us last week and plug a trend yield in it, we're actually going to produce less beans this year than what we're consuming for the current year. So to put it in perspective, we're going to have a drawdown, or in essence have to import even more beans from Brazil just to keep the balance sheet flush. And when I look at what's going on in the drought, like we're talking about, what are the odds we're actually going to pull those record yields out? So I think, you know, there's nothing wrong with locking in profits, because we saw what happened a year ago, folks. Everything was profitable. The pandemic hit and everything kind of went sideways. But we were saying, take some of that profit margin and don't be afraid to re-own it with some options.
On the corn side, I know after the report last week, a lot of guys, we saw some corn move into the pipeline finally on the old crop that was left out there. A lot of sales sounded like they were made, and which rightfully so. Really good basis out there in the countryside right now. But if you look at anyone making any old crop corn sales or turning their attention to new crop, is there anything there they should look at? Any advice?
Well, it's the same argument for the corn. I mean, if you look at the corn, the acreage number the government gave us, you have a trend yield, okay, which is about 3 bushels better than the previous record yield. You're only going to add about 100 million to the carryout with our current demand ending stocks of around 1,213. So just like the beans, folks, there's literally no room for error. So we'd recommend guys that, especially on new crop, if you're making sales, you want to re-own, you know, with a vertical call spread or something just to spread off that risk. Because we are in a situation, folks, that we haven't been in for a while. And when the market gets manic, it could be explosive. Remember, Jess, we also just expanded the amount of position the funds can carry. So we don't know what can happen this summer, but just a real quick antidote. Anybody's out there, look at the price of lumber. You know, lumber was at $250 a year ago. It's now over $1,000. If you want to build a house right now and you haven't priced it, and you priced it 6 months ago, man, you are in for a sticker shock. That's the emotion that could come into these markets, because the real question you got to ask yourself, Jesse, anybody out there, we always in the industry say, well, we just got to ration demand. The question is, what does it actually take to ration demand? The ethanol industry got completely beat up last year, but it never completely shut down. It just slowed down.
Yeah, very true.
How high do you got to go? If you're feeding a livestock producer right now, how do you, quote unquote, ration demand when you've got a barn full of pigs? Yeah. It becomes a huge problem. And then you set yourself for a squeeze potentially. So the weather is going to be crucial this year. So yes, we'd recommend, no doubt about it, having calls bought.
On the wheat side, saw a little weakness there, especially KC wheat today. Better crop ratings came out in that first crop progress report on Monday. And surprisingly, world wheat prices falling, but Russia and Romania were the cheapest Egypt offers here today. That kind of surprised me, even with that export tax in Russia. But looking at this wheat market, anything there, whether it's here in the U.S. or on the world market, that we need to watch out for?
Right now in the wheat, we're just kind of watching where the wheat and the corn prices are, because right now what we're seeing is probably anything is you got to find corn. Corn's getting, wheat's kind of a little bit cheaper to corn. Maybe you're going to start seeing the feed substitute. The real other question we're going to see, honestly, is are people going to rip up the wheat? I mean, when you look at the price of wheat and the price of beans, the price of corn, you are hearing actually producers that are essentially saying, hey, I'm going to tear this up and I'm going to plant something else. So the acreage is debatable where we're going to be. And then, like we mentioned earlier, you still have a pretty good drought going on in Kansas. They did get some rain, but if the heat breaks up, I mean, we're seeing 80-degree temperatures here in Chicago. That's great. Love it. But the fact is that is way above normal. And if we see these temps in another 6-8 weeks, it really could put some stress on the wheat crop potentially.
Very, very true. Jim, let's flip over to livestock. I want to talk this hog market here today. The last couple of days, we ended up closing okay today, but I know Monday we saw a little bit of weakness in hogs. Maybe a little bit was there today. I was happy with the close, but are you seeing any weakness start to build into this hog market, or are we just kind of doing a little consolidation before we maybe try and run this thing higher again?
Right now, it feels like there's a little bit more consolidation, in my opinion. We are overbought, technically speaking, and that's causing a little bit of easing of the positions at this point in time. But I think when you look at the overall track of the protein market, the trend is definitely up. The beef market continues to work higher. The economy is opening up. We're sticking 3 million, 4 million people a day with the shots. People are starting to go out. We're looking at record GDP growth, not just the United States. They're talking record 6% growth in the world right now. So as the world economy opens up, you're going to see a lot of pent-up demand, folks. I think not just U.S., around the world, and they're going to go out to eat. I mean, we went out to eat for Easter, and even in the Chicago area, which is still restricted due to the COVID, the restaurants are full. And you go down to some of the other states down, we're talking to customers, we're a little bit more open. They're completely full. So I think it's a good sign for the protein industry. You're going to continue to see demand for this product to go. And I think the overall trend is higher. And just like the grain market, the inflationary play is still in play in that aspect as well.
Well, with the hogs, especially, we got over that psychological barrier of $100, and we kind of held ourselves a little sideways here, but we've held that range, and I think that's a big key there, Jim.
Yes, no doubt about it. Holding it psychologically. The other thing we got to keep an eye on is what's going on in China. I know there was a report, I think a dead hog floated into, Taiwan this morning, and that just shows you they're still dealing with this issue. It's probably worse, folks, than what we think. But we've seen China come in out of nowhere and buy a lot of pork. Now, China's been on vacation the last couple of days. They're coming back here at the end of the month. It wouldn't surprise me to see them come in and continue to buy porks on breaks because plain and simple, the demand's there.
Well, looking as well on the demand side and looking at cattle, this cattle market's starting to look really, really strong, Jim. I know we're finally starting to get higher prices in feedlot country, and we saw good strength on the board today. And overall, we got that feeling that spring price rally is finally here after weeks of just sideways trade. Is that what you're seeing, Jim?
That's what I'm saying. I mean, it was a long, painful consolidation in the cash market. It's finally breaking out. The beef market's going higher. Like I said, people are opening up. So no, I think that trend, the next leg is upon us as we move into this early spring season.
So if I'm a cattle producer or even a hog producer, it would almost, like you alluded to, kind of the same story as grains. It would seem like if I can get some hedges in place or something and leave some of that top side open, that would be the smart thing to do right now.
That'd be our recommendation. Folks, consider puts. That just floors it, leaves the top side open. If you like a futures price, don't be afraid to lock in some profits. I mean, remember, we all are in this game to make money. And, and the lock-in profits is not a bad thing, especially if you're only selling portions of your stock that you're selling. But we would recommend buying options kind of to cover the upside, because the one thing we don't know this year is how high is high. On the grains, it's going to be weather driven. I think on the livestock, it's just the economy driven. It's just how, there's trillions of dollars, folks, that have been sitting on the sidelines, that people have been locked in their homes for the last year. They are just begging to go on vacation and go out and spend it. Anybody who's been on vacation, I don't know about you, Jesse. My wife, when I tend to take our family, she convinces me to go to rent a nice place on the ocean that has a kitchen. I don't think we've ever used a kitchen. We always end up going out to eat. And experiencing the local flair. And I think most people are like that. Mm-hmm. I saw the other day, United Airlines essentially are 90%, or their bookings are back to 90% of pre-COVID levels. So the country is on the move. And I think you got to take that as a producer. That's got to be exciting, because that usually means demand for our products.
Very, very true. Jim, any other final thoughts you have for us today on the market trade?
Oh, right now, I just say, folks, we've seen a lot of volatility the last 4 or 5 days of trading, and I don't think this is the end of the volatility this season, folks. I think it's a prelude to it. I think as we go into the summertime, the ag markets are going to get very, very exciting, and but do not get too over. Control the risk, build a marketing plan, and execute it. Plain and simple.
Well, Jim, I know if producers need a little help with that marketing plan, you guys do a great job. You guys have the app, you have the website, you have a ton of information out there to help producers, not to mention working with you guys directly.
That is correct. The best way to get a hold of us, go to the agmarket.net webpage. We get all our research. We also have an app you can download there, folks, that'll kind of help you manage your break-evens. So if you have any questions, just give us a call.
Well, Jim McCormick with agmarket.net. Appreciate you joining us here on this Tuesday. Have a great rest of your week.
You too. Thank you for having me on.
Jim McCormick joining us with agmarket.net. That's going to do it for the Tuesday, April 6th edition of Market Talk. Find us online, markettalkag.com. I'm your host, Jesse Allen, wishing you a great